Study Unit 15, Analysis and Interpretation of Financial Statements. When you see the word analysis, what does that mean? Oh, okay. All right, so yes, that's important. Good. Okay, so you spoke about information. To do analysis, you need information. As you said, we're going to examine and we're going to look at the information and we're going to pull out things that are important that we can use to do a calculation so that we have a measure. We have something that's going to help us with our analysis. Okay, so analysis is basically like determining if a company is doing good or bad. Okay, so how do you determine that? You need ratios. Okay, so in this section, you're going to be looking at lots and lots and lots of different ratios. A ratio is just a formula. Okay, it's like an equation, and the equation will have either a numerator and a denominator, or both, or it won't. It'll just be a straight equation, plussing and minusing, but it's a ratio. I've given you a list here. I've broken up into categories. So you have liquidity ratios, you have profitability ratios, and you have solvency ratios. Okay, ratios tell you something about the data or the information. Okay, so if I'm analyzing the data, it's going to give me insight into what's actually happening in the business. Okay, and we look at liquidity as a section. Right, what does the word liquidity refer to? Try. Okay, so liquidation means? Okay, so that's right. So a liquidation of a business would be what? Taking all its assets, selling it, getting cash, paying off all the liabilities. Okay, so liquidity is looking at something similar. It's the ability to pay off obligations. Okay, short-term obligations. Short-term obligations. Okay, so can I pay my creditors? Can I pay my short-term loans? Okay, that's liquidity. Liquidity relates to operations. Okay, I'm operating. So as a business that's operating, does the business meet all its obligations in terms of paying off its liabilities? Okay, short-term liabilities. So the ratios here that you'll see: current, quick, trade receivables collection period, inventory turnover rate, inventory holding period, and trade payable settlement period. Okay, these are all different ratios that you'll see just now. It's a formula. Okay, we'll discuss it just now when we look at the examples. Profitability, what does that mean? Think about this word. Yes, income minus expenses. That determines whether the business is profitable or not. Okay, so we're going to be looking at different ratios that tell us about the business's profitability. Gross profit percentage, profit margin, return on assets, interest cover. There's lots of different ways of measuring profitability. These are the ones that they've given you. Okay, so the ones that they give you are the ones that you need to know. The last one is solvency. Okay, so maybe to relate this to what you had earlier, liquidity, you thought of liquidate. Solvency, you can think of insolvent. If you're insolvent, what does that mean? You're bankrupt. Okay, insolvent means bankrupt. Okay, meaning yeah, but solvent and insolvent. Okay, so insolvency is actually an area of law, if I'm not mistaken. Yeah, insolvency. It's what happens when businesses go bankrupt. Exactly. Okay, so you'd be looking at the law there for insolvency. Okay, but we're not looking at the law side of things. We're looking at the accounting side of things. Okay, so solvency, forget about the in for now. Solvency is looking at how much debt, okay, does the company have in terms of its assets. So in other words, assets and liabilities. That's basically what you're looking at. And we know the difference is going to give us our owner's equity. Okay, so A minus L gives us either an amount that's positive or negative. If it's positive, that means we actually have wealth or worth. If it's not, we don't have anything. Okay, if your liabilities exceed your assets, you're basically insolvent. Okay, you're technically insolvent. Okay, I see the numbering in your textbooks a little bit different to the one that I was using to reference the formulas. Let's go to your study guide. Okay, study unit 15 is what we're looking at. We're looking at the analysis and the interpretation. Okay, this is the key page because that is what you need to NB study. Okay, when you go into your exam, you're literally going to learn those equations, and then just for the exam, you're going to be needing them in order to calculate an answer. Okay, just to go through the ratios so you know what each of these mean. There's the first one, current ratio. The current ratio is looking at your current assets over your current liabilities. What is that telling you about the business? Well, do I want my assets to be bigger than my liabilities? Yes. So I would want my assets, meaning my numerator, to be bigger than the denominator. Okay, so if I've got a bigger denominator, bigger numerator, then I want a ratio that's greater than 1. Okay, so greater than 1 is good for the current ratio. That's if they ask you to analyze, okay, in terms of interpret. Okay, so interpreting ratios is key. So if I have a current ratio that's less than 1, that's bad. If I have a current ratio that's greater than 1, that's good. Then you have a quick ratio. The quick ratio is the current ratio because remember, current is what? Current assets over current liabilities. Okay, notice, if I now include the inventory, if I take it out, I then get the asset test or the quick ratio. Okay, so the way I like to remember this is quick. Can you always sell inventory quickly? No, sometimes you can't. Sometimes people don't want to buy those items. Okay, so what this ratio is saying is, if I've got current assets and I know what my current liabilities are, okay, we know inventory is also a current asset. So if I take out inventory, meaning I subtract it from my assets, then I've got what's left over. So will the what's left over still cover my current liabilities? That's basically what you're saying. Okay, so with the quick ratio, you're saying, well, how heavily do I rely on my inventory in order to help me meet my obligations? That's basically what you're saying. Okay, and again, the decision or interpretation would be greater than 1 is good. That's what you're looking for. Okay, the next ratio is the trade receivables collection period. Okay, the formula is here. There's the equation. Right, trade receivables collection period is the average trade receivables over the credit sales. What you guys do need to know is how to calculate an average. Okay, that's what we're going to discuss here. Okay, so average, you write this down somewhere on your notes because you do need it. Average equals start plus end divided by 2. Okay, so in other words, what I started with at the beginning of the year, so beginning of the year plus end of the year divided by 2. That's going to give me an average. Okay. Then I divide that by my credit sales. Credit sales, because I'm looking at debtors. See, it's easy to remember because the examiner is going to have to give you this. Trade receivables collection period. They need to tell you what calculation to do. Okay, so if they're asking you to calculate the trade receivables collection period, think logically. Trade receivables refers to who? My debtors. Then I've got numerator, which is the average, over the denominator. What do I do with my debtors? I sell to them on credit. See, that's how you can help. that's sort of what I can do to help you remember these equations, is to try and link things together. So when you see the word, because remember, if I block out this, you will only have that in the test. Okay, so they say, calculate the trade receivables collection period. As soon as you see that, you're thinking trade receivables, debtors. What do I do with debtors? I sell to them. And then you've got the equation. Okay, just remember it's a period. So periods are measured in time. And the time period that we use here is number of days. Okay, so how many days does it take you to collect your debtors? That's what this is saying. Okay. Right, so I just want to show you the average here. Okay, the average here, they gave them the average, but we'll look at an example in the test paper. Okay, I'm hoping there's an average there. There's definitely average in other papers. Okay. Right, maybe just to check that quickly. Here's the paper. Okay, yeah, we will do it. See? Receivables and payables. So we will work out an average. Okay, so don't worry, we'll come back to that just now. Right, inventory turnover. There's the formula. Make sure you know it. Cost of sales over average inventory. Okay, this is actually good. Your textbook or your study guide actually gave you the definition, okay, for average. So there's it there. We wrote it down earlier. The study guide actually gave you the equation for average. Opening stock plus closing stock divided by 2. In other words, start plus end divided by 2. Same thing. What does the inventory turnover rate tell you? Oh, I didn't talk about that here. Do you want this ratio to be longer or shorter? Do you want to collect sooner or later? Exactly. Okay, so the period, if the period is shorter, then that's good. Okay, you want the collection period as short as possible. Collecting sooner is better than waiting. Okay, so in this scenario, it's looking at the inventory turnover. This ratio is telling you how quickly am I selling my stock. Okay, because cost of sales is your sales, what I've sold. Inventory is what you have on hand. Okay, so we're looking at the speed in which I'm selling my goods. Okay, so here they've given you 4.5 times, okay, in the example. Right, it's just a measure of how quickly or slowly you're selling your stock. That's all it is. You'd obviously want this to be higher rather than lower because you want to sell stock quicker. You don't want to keep stock for a long time. The sooner you can sell stock, the better. Okay, then you've got inventory holding period. There's the formula. It's the inverse of your inventory turnover ratio. So remember we just saw inventory turnover? If you flip it around and you times by 365, you get the inventory holding period. Okay, holding period meaning? Yes. Okay, in days, how long have we actually held the stock for? Again, you want this to be longer or shorter? Shorter. I don't want to hold stock for too long. The shorter the ratio, the better. Okay, trade payable settlement period. There's an equation for that. Where did they put it? They didn't put it here. They should have. Oh, they did. There's it. Okay, there's the equation. Okay, so again, to help you guys remember this for the exam, trade payables, think logically. Trade payables, I should be thinking about creditors. Creditors, what do I do with them? I buy from them on credit. Okay, so my numerator is my creditors, my denominator is the credit purchases, and that's how I get the formula. Times by 365 gives you the number of days because that's a period. Do you want this to be higher or shorter? Not higher, longer or shorter? Yes. Okay, you would want this ratio to be longer, assuming you don't get charged any penalties, fees, or additional costs. Okay, but you would want to try to drag that out as long as possible. Okay, so push the payment out. I don't want to pay early, I want to pay later, but I don't want to incur any additional costs. Okay, that's what you're looking at here. Okay, so your ratio should be longer, assuming no other costs or penalties or fees. Okay, then you've got profitability. There's gross profit margin. Okay, percentage. Right, with these, you always have sales as the denominator. Okay, it's either gross profit margin or net profit margin or profit margin or something margin, okay, or percentage, right? And that's what they refer to it as. Sales is always the denominator. Then you just change the numerator. So if it's gross profit percentage, it's gross profit over sales. If it's profit margin, then it's profit before tax over sales. You're just changing the numerator. Okay, return on assets, that's different. Okay, that one you don't even have to study. Return assets. Numerator is the return, denominator is the assets. Okay, easy to study. There's the assets, so you've got the one. You just need to remember that when calculating the return, I'm using the profit before interest and tax. Okay. Interest cover is profit before interest and tax divided by the finance costs. Oh, before I move on, I'm not talking about the interpretation. Okay, gross profit percentage. Do you want this to be bigger or smaller? Big. Correct. Okay. The bigger the percentage, the more profit we're making. Same thing here. Profit margin, the bigger the percentage, the more profit margin we're making. Return on assets, the bigger the ratio, the more return that we're making on our assets. Okay, so you always want these to be bigger than smaller. Okay, and then we've got interest cover. Interest cover is looking at how much have I covered my interest in terms of financing costs. Okay, because remember, if I have to pay my interest, that's a liability. Okay, so this is looking at profit. How much profit do I have compared to my financing costs? Okay, again, the more I've covered my interest, the better. Okay, so the bigger the answer, the better in terms of covering interest. Okay, so obviously if I've covered interest 5 times, that's not as good as covering the interest 10 times. 10 times would be better because that means you've got more profit to pay for your interest. Okay, then the last ratio is solvency, which is total assets over liabilities. That one's easy to remember. See, we spoke about solvency. I mentioned it previously. Insolvent. Insolvent means you've got more liabilities than assets. If I've got more assets than liabilities, then I have owner's equity. Okay, I've got wealth. Right, so assets over liabilities, the ratio again, the bigger the ratio, the better. And that's it. Okay, so very, 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 very important is the page that I've got up here. This summary is everything. You don't even have to really go back to the textbook. You just need to study and learn all of these equations. Right, and this is what we're actually going to be using when doing past papers. Right, so now we've covered the ratios. I now need to show you how to do this. Okay, so here's question 3. Okay, question 3 was out of 19 marks. No. Yes. Okay, right question. Question 3 is out of 19 marks, and it's out of 24 minutes. Okay, so let me go to my answer sheets. Okay, let's call this question 3. Okay, these are your ratios. Okay, so the first thing that you need to do, good exam technique. This is how I would have approached the exam, because remember, you would have studied for this exam. This is October, November 2016. Immediately when I'm given the paper in the exam, okay, so the examiner walks around and they give you the paper, they give you the script, okay, the invigilators. Right, the invigilator is going to give you a paper. I'm going to immediately take the paper, I'm going to look at it, and I'm going to see, well, do I see this? Yes, I see that, and I'm thinking, that's easy marks, as long as I know what? As long as I know the equations. Okay, so at the beginning of the exam paper, I'm going to look for that because I've just studied my material the night before, so going to the exam, I know all these equations. So I'm not going to do question 1, 2, 4, and 5, because if I do, at the end of the exam, I might have forgotten some of the equations. Okay, so immediately I'm looking for that. I see, ooh, there's it there, question 3. Let's go to question 3. And I go to the required, and I look at it. Oh, there's my required. And then what do I do in the exam? I quickly jot down from memory, write down all the equations. Jot down the equations, jot down the equations, jot down the equations, and then I get full marks for this question. Okay. So, trade receivables collection period, there's A. Okay, so what do? I go to my memory, well in this case, my summary page. Okay, just read out the ratio. What ratio do they want? Okay, so trade receivables collection period, there's it. I'm going to take this, copy that, and I'm going to paste that here. There's A. Okay, can you please read B for me? What does B want? Okay, so go back to your formula sheet. This is what I study. This is what I write down from memory in the exam. Okay, give me C, please. Current ratio. That one you don't even have to look at your summary. You can literally just write it down. It's CA over CL, like that. Okay, D, please. Return on assets, same thing. We don't really need to study that one, but the return we need to know. Okay, so this one I will copy paste because it looks nice like that. Numerator and denominator. Let's put that there. Okay, E. Solvency, that we just saw. Assets and liabilities, that you don't even have to learn. Well, you don't really have to refer to. Okay, solvency ratio equals total assets over total liabilities. Okay, in your exam, you obviously won't abbreviate. Write down the full words. Okay, I'm just abbreviating to save a bit of time. Okay, makes sense. Right, so now we go back to the question, and now we've scribbled all our equations. Now, when I actually do the question, I get full marks because all I need to do is look for the right amounts. That's all. Okay, they tell you, please note, all formulas and calculations must be shown because they're probably going to give you marks for it. All answers must be rounded off to 2 decimal places. That's important. Make sure you round off answers to 2 decimals. Okay, so let's go to the question. Let's see what we've been given. Okay, I've got a statement of financial position here. I've got assets, I've got non-current to current, I've got equity and liabilities, non-current to current, equity and liabilities. Then I've got additional information. They tell me credit sales represent 65% of sales, total sales amount to 950. Credit purchases represent 45% of total purchases amount to that. On 1st March, the opening balance of debtors was that, and creditors was that. Profit for the year was 260,500. And then they tell you an extract from the statement of profit and loss and other comprehensive income indicated an interest expense of 74,500 and tax of 50,500. That's what I'm reading in the question. Okay, is that all right? So I've got an idea of what I've been given. Now, all I do is I go back to my answer sheet. Number 1 wanted what? Average trade receivables. Okay, so let's work that out. Average trade receivables. Open brackets, start plus end divide by 2. Okay, so go to my question. Where's my start? There's my start. Debtors control, 175,000. 175,000 plus. Where's my end? Trade and other receivables. There's it. 217. Okay, so 217 plus 175. Close bracket, divide by 2 equals. Type that into your calculator. You get an answer of 196. There's the average. Okay, next bit. Credit sales equals. I need my credit sales. Do you agree? What did the question say about credit sales? Here's it. 65% of total sales are credit sales. What am I going to do? Just take 65% of that. Does that make sense? Okay. So 950,000 times, what is the percentage? 65% equals, let's check. Equals 617,500. There's my credit sales. Okay, so now can I work out my trade receivables collection period? Yes, I can. Okay, so I'm going to substitute into there. So equals, open brackets. My average trade receivables was 196. Divide by, my credit sales was 617,500. Close brackets times 365 equals. you see what I did? Okay, so I'm going to take that and I'm going to solve. Can't be 0, oh, no wonder the x. Okay, there we go. Right, so 115 days. There's the answer for number A. Hey, did you follow that? Yeah. Is it okay? Right, so ratios are easy. You're literally just pulling out figures from the information. The hardest part is this, studying all of that. If you can study it, then you'll know what to do. Okay. Right, let's look at the next one. Trade payable settlement period. Okay, so I need average trade payables. Okay, start and end. Divide by 2. Right, so go to the question. Okay, you tell me what the amounts are. I'll tell you if you're right or wrong. I want the start and the end for my trade payables. Yeah. Good. So there's the one amount. Where's the other amount? We need start and end. Yeah, that's end. Here's the start. 1st of March, 325. Do you see that? Okay, so that's what I need. So now I've got start and end. 325 plus 373, 500, close bracket, divide by 2 equals that amount. Okay, then I need my credit purchases. Okay, tell me how I'm going to get that. Good. Good. Okay, 45% of total purchases are credit purchases. So 55,800, 880, 55,880, 550,880 times 45% is the credit purchases. Do you agree? Okay, that gives us that amount. Right, all I need to do now is substitute in. So, equals, what was my average trade payables? 247,896 divide by. What was my credit purchases? Wrong one, sorry. I'm reading the wrong amount. Okay, the trade payables is 349,250. Divide by the 247. Close brackets times 365. Equals an answer. 504 days. There's the next answer. Okay, now you've done another one. Right, current ratio, easy. All I need is what? Current assets and current liabilities. So can you read the current assets and current liabilities from the question? Where is it? What is it? Ooh. What do I want? Do I want total assets? I want the current assets. That's better. I want the current assets. I don't want the total. I want that one. Okay, 568. Divide by current liabilities. Yeah, 373, 800, 500. Okay, there we go, that's it. Right, so if I take numerator, denominator, I get 1.52. There's the answer, current ratio. Got that? Okay, next, return on assets, profit before interest and tax over total assets. Okay, so I need the profit before interest and tax. Why? Because here they gave me what? Profit for the year. Okay, so they gave me profit for the year, which is after interest and after tax. Okay, so I need to do a working here. Profit before interest and tax, then I would less interest, then I get profit before tax, then I less tax, that gives me profit for the year. Okay, so those are totals. I want to know what this is. Okay, was I given the interest? Yes. Interest expense for the year was 74,500. 74,500. Tax for the year was 5,500. 5,500. Okay, obviously I'm subtracting those two. Okay, and I'm trying to work out my profit before tax. Okay, do I have the profit for the year? Yes, I do. There's it. 260,500. 260,500. That was the profit for the year. Okay, so I want to know what this is, and I want to know what that is. Okay, so profit before tax is after you've subtracted the tax, right? So if that's the answer, how do I get back to the profit before tax? I add what I would have subtracted. Does that make sense? Okay, some basic maths. Okay, so this plus that gives me that answer. Okay, if I've got profit before tax, and that's after I've subtracted the interest, how do I get back to before interest and tax? Just add back the interest, right? Okay, so those are the three amounts that I need to add up. Okay, so this plus that gives me that answer. Now do I have profit before interest and tax? Yes, so ROA equals 385,500 divide by, what are my total assets? Yes, the 1,548,000. 1,548,123. Okay, times 100 equals a percentage. Okay, 2.49%. That's very small, very low. Okay, and then the last one, current solvency ratio, total assets over total liabilities. Solvency ratio equals, where's my total assets? We just spoke about it. There's it. 154,800. What are my total liabilities? Good. 931? 931,500. Okay, so if I divide those two amounts, I get 1.66, and that's the answer. Okay, save. Oh, remember you have to round it to two decimals. Alright, so obviously some of these you'll round off. Okay, that'll be, maybe let's round off just to make sure you guys are okay with that. This would be 115,85 days. Okay, round it off. This will be 514,23 days. This will be 1,52. This will be 2,49, and this will be 1.66. Okay, right, save that. Let's go back to the question, and have we answered everything? Yes, we have. Okay, 19 marks, 24 minutes, you just got 19%. It's not bad. Okay, this was a big question in this one paper. Okay, and that's the end of this week's theory. Okay, so we've covered ratios, and we've looked at some theory related to trust accounts.